Dear participants and panel, welcome to today's webinar hosted by Newsec, themed The Impact of COVID-19 on the Nordic Property Market. My name is Henriksson. I'm your host today. We're really excited to be able to have well over 300 participants alongside with our distinguished international expert panel. And we are looking for an interactive seminar, so I will encourage all participants to look up the place on your website where you can post questions, and we will accommodate them, as we go along. Since, to our mind, there are actually fewer, more relevant times than now to put the important questions on the table and to debate the impact of the pandemic to our industry. So let me introduce the panel. Please welcome Jani Nokkanen. Jani is the CIO and partner within NREP and is member of the investment committee. And Jani is also fund manager of NREP, Nordic Strategies Fund. And Jani is based in Helsinki, a beautiful city in the Nordics. Secondly, let me welcome Jens Henriksson. Jens is president and CEO of Swedbank. Previously CEO of Nasdaq. Jens has an international experience with IMF in Washington, and Jens is based in Stockholm. Welcome, Jens. Michael, welcome. Michael Swank is managing director for the Blackstone real estate group based in London. Mr. Swank focuses on Blackstone's real estate acquisitions in Germany and the Nordics. And Rikke, welcome Rikke to the seminar. Lykke is European head asset manager as well as regional head of North, Central and Eastern Europe within Patrizia. Rikke is also head of corporate integration where she is responsible for all post-closing merger activities of Patrizia. And Lykke is based in Copenhagen. And finally Max Barclay, head of Newsec Advisory and one of the principal owners of Stronghold Group, with Newsec and NIEM as main holdings. And Max, you're based in Stockholm. So we have a great coverage of the Nordic region here. And let me kick off the first session. We know that the real estate market in the Nordics has been booming for many, many years. However, the pandemic, COVID-19, has changed the market conditions, we presume. So I would like to do a roundtable with all of you, starting with Rikke. And the kickoff question would be, what keeps you awake at night, given the circumstances? Please, Rikke.
It's a good question. It's actually something that changed over time. We've now had this pandemic for 3 months, depending on which countries you look at in Europe. I've had it in my team and been affected in my team with the COVID experience since late February, early March. So we're going on several months now. In the beginning, I have to say that my biggest focus was the delicate ecosystem in which we work. It's an ecosystem where you have occupiers, you have third parties, you have investors, and you have the financial institutions. And that ecosystem, it was very important to us to keep in balance, meaning we all had to contribute somehow. But so it couldn't be one-sided. Everybody has to stay in balance. Maybe everybody has to go down a little bit, but everybody has to stay in balance. Because if the ecosystem starts swinging to the side, you get into trouble. So that was our first focus. Figuring out how was the ecosystem in the different countries and in the different funds we were managing. It has gone fairly well. What was proved to us was the communication with all parties involved, all stakeholders of the fund is key. But we've also managed in an environment where different governments have reacted differently. And even in Germany, and Michael would know that, the Bundesländer of Germany has acted differently. So we've had to navigate through different governmental packages, different governmental initiatives. At the same time, we had to do that, so did the financial institutions and our occupiers. So everybody has been in the same boat, and everybody's been trying to keep that boat or ecosystem, as I call it, in balance. Now it's switched a little bit, I have to say, and now what keeps me awake at night right now is to make sure that all the employees are staying in good motivation and in good health. The pandemic has quieted down in most countries, and we're opening up, but also, quite honestly, not only our employees, but employees across Europe, also here in the Nordics, have been under a different kind of pressure. Sitting at home in a flat, either alone or with your partner and children, not being able to go out like some of my colleagues have not been able to, trying to manage that and video calls all day is a pressure that we've not experienced before in history. So making sure that our tenants, that our colleagues in other companies and other third parties that we work closely with are all getting aligned and are all coming back in good health, that is important to us at the moment. So it's switched.
So Rikke, that just the pure fact that we're on web here and not meeting in Copenhagen in a nice conference location is a proof of what you just sort of presented and stated. Max, you spend time as an advisor with various boards, I guess, and investment committees and so forth. So what's your reflection?
Well, being based in Stockholm, I'm quite humble that we are like an outcast in the world, because things are very, very different in Stockholm compared to many other places in the world. And if you take out the humanitarian part of this, because I'm not an expert in pandemics or medicine, what keeps me worried is the long-term economic effects that we haven't seen yet. I think this is something that will be debated and will be the main subject for the fall, where we will see, the unemployment rate going up and, economics shrinking and things like this that will have a real long-term effect also on the real estate industry. So these effects and how large they will be as a consequence of the lockdown globally, that is what keeps me awake right now.
Thanks, Max, and that's a great segue to you, Jens. And the question there, if I may frame it differently, do you feel you will have or already have had different conversations in your boardroom now than before the pandemic?
And you're talking to me, so I'm not the only Jens. I'm the Jens you're talking to, or
yes.
Good. Sorry about that. Now,
okay.
When it comes to boardroom discussions, I would like to put it the following way. I think what will happen with the economy is that we'll go through 3 different phases. The first phase is the mitigation phases, and that's sort of from an economic policy perspective, and that's a pretty easy perspective, because what you do then is you just throw money at it, both from the central banks and the government. Then the other issue will be, or sort of the other phase will be the phase of sort of opening up the economy. In such a phase, what will happen is there will be 2 things. One thing is that you will try to use sort of different methods to sort of increase investments. And at the same time, you want to take down the different mitigations effects you've taken before. But I think the really difficult phase will be phase number 3, namely in 5, 6, maybe 7 years of budget consolidation. If we look on the budget deficit in Sweden right now, is huge. We started off with sort of a surplus in public finances, a low debt, but you cannot run sort of an economy on a sort of a long-term basis. So I think what will happen and what is discussed in the boardrooms are the long-term effects. What will happen in society with higher unemployment? How will the sort of differences between the different wage groups, how will that be affected? So I think the key point is not sort of right now. The key point is a few years ahead.
Thank you. I agree. And to you, Jani, you're actually in a country that has, in comparison to Sweden, chosen another route right now. And but I guess what keeps you awake at night?
Well, the main one has already been said, so I don't spend much time. It's the overall economy. What's going to happen in a long term, 5 to 10 years? I think that's the key. We are in a long-term business, and you can mitigate and manage the short term, but it's really about the economy in long term that will hit us. And as I feel that we are a bit in a bubble here in Nordics in a real estate market. And then we continue as is, taking that we are the safe haven. I cannot help thinking that eventually the world will catch up. It has always catched up. We are an export economy, small country in Nordics, and I mean the Nordic countries in overall. And then it's delicate business. And we are in a fund business where it's very important to look the 5 to 10 years. So that is the main one. But if I try to contribute and give some other perspectives, then maybe something that is specific to us, we are very much in development and early stage of deals. That has definitely kept us awake. So when this kind of economic shock happens, and especially the COVID, which hit the population, then there was a real shock on construction industry and development industry. Typically, it's the banks who shut down. And that's the main issue. This time it was different. It was actually to the construction companies. We were starting to look whether they are able to ship stuff from China to finish up our constructions and taking our relatively large development exposure. Then that was something that kept us awake. It didn't materialize, at least so far, but it definitely kept us awake.
Thanks. Michael, from your perspective in London, looking at the Nordics, where are your worries? Where are your thoughts going right now? And as Jens said, maybe also for the future.
Yeah, I think, to be a little, I agree with everything that everyone has said so far, but maybe to bring it, more specifically to the real estate market. I think for us at the beginning of this, like Rikke said, it shifted a little bit what worries us as well over time. I think originally, what was literally keeping us up at night was, just the sheer amount of work trying to figure out what was happening in our portfolio, trying to understand the different government policies in place across the different countries was not particularly straightforward. And then also just from our side, trying to come up with, what's a reasonable and consistent way to deal with things like tenant rent relief requests. And now that we have that more or less stabilized, I think as we turn towards the future, what worries me, I think if you think about the different, main asset classes in real estate, I think, there's a pretty strong consensus on generally what's happening in terms of retail and hotels, in terms of things that are maybe not going super positively at the moment. But I think as I think about the real estate market from a more broad perspective, what would worry me about the overall health of the industry is, you have that second wave, you have, more significant economic dislocation than what you have today. And then that really starts feeding into the office market. And I think that's something that is a risk, not just in the Nordics, but across Europe. But one, because of how sizable that asset class is compared to hospitality, for instance, and, how low the yields have been, and how high the rents have been, particularly in cities like Stockholm. So where I think now everyone's reasonably confident that there's not going to be a massive crash there. But that would be the sector that I, theoretically would be most worried about in the future should the economic situation, turn meaningfully more negative than it is at the moment.
Thank you, Michael. And let me throw a question out there. Do you believe that the pandemic or the COVID-19 situation have accelerated trends that we already saw and debated, but they're sort of here faster? Is that the point, Max, maybe from the advisory side?
Yeah, I think that's a really good way to put it. I think there is a lot of things that has accelerated. I think the digitalization trend is one of them. I think co-working is another. So I totally agree that in some ways it has functioned as an accelerator for trends that we saw already. I think that going back to retail retail has been struggling for a while, especially certain types of retail. And I think those problems has just been greater with the pandemic. But you need to remember that other things are actually working.
I agree. Thank you. Let us move into more specifics, since this is a property seminar. And I guess what I believe many of those who's listening in would really like you to expand on is really, you know, if the Nordic as a region still will be as attractive as before the the COVID-19, and if what would be the threat to that attractiveness, or so let's start with that one. I guess Michael, maybe you could sort of pick up on that question, and we will sort of take it further.
Yeah, look, I think the Nordics to us have always been super attractive for, I think, the reasons that everyone on this call will well understand. You know, very wealthy region, you know, very high education quality. I think, you know, from a demographic perspective, maybe with the exception of Finland, relatively strong population growth in a Western European context. Very, you know, I know there's been more government instability over the last couple of years, but you know, compared to the rest of Europe, it still looks fantastic. So I think those are things that have always attracted us. And from a real estate perspective, the markets tend to be very liquid, very transparent, easy to do business, and not, you know, hostile to foreign investors like us in the same way that, you know, it's more difficult in some other countries. And I think what's you know, interesting speaking to people, you know, we've liked it, but I think for other pan-European investors, it's always been a region that's relatively more difficult than some others, largely because of just the size of the domestic capital base and how sophisticated the local investors are. Meaning, and there's been frankly less distress over the last, you know, cycle than other parts of Europe. So the need, quote unquote, for international capital has just been less than in some other countries. And so it's been difficult. So people say, you know, it's challenging, and then they don't spend as much time there as they need to. And I think, you know, as you know, investors, you know, based in the UK and the US like to think of it as one region. But the reality is it is 4 separate countries. You know, you can't do business in Helsinki from Stockholm for the most part. And so you need to spend real time there. But what I've noticed from, you know, first internally from our perspective, you know, the things that that I just mentioned that always attract us, the Nordics, I think that has become, you know, even more salient today. I think there's a very high correlation with, you know, the countries that are feeling very optimistic today. I would say the Nordic countries, the Netherlands and Germany, kind of being the clear standouts in my perspective in Europe. The kind of the quality of the government and the fiscal standing of the government. And I think a lot of people, you know, we see that, and I think a lot of people, other investors in Europe have seen that. And so there's been a handful of people that I've spoken to that have said, you know, we weren't big investors in the Nordics before. It was always kind of too difficult and easy to just write off. But we are planning to spend more time there relative to Southern Europe, for instance, than we were going into the pandemic. So I think, you know, the strengths of the Nordics as a region have been highlighted throughout this crisis, and I would expect that there actually will be more international capital targeting the region than there was before.
Thank you. Jani, do you share the perspective, or do your investors have a different sort of appetite?
We are, of course, very biased taken that we are the Nordics one, and it is the sales, our marketing story that the Nordics is the very interesting part at the moment, but definitely have very similar view that in Nordics has been already interesting for the past 5+ years for the same reasons. COVID-19 just emphasized that the strength of Nordics. So we have definitely felt the pressure from the international capital. So even though Michael says that there hasn't been that much, then I think all of the local players feel that there has been a massive amount of international interest, at least. Maybe not that much on transaction because it is a hard market to get in, as you point out. But definitely there's a lot of capital hovering in the deals. Do I expect it to continue? Yes. As Michael points out, I think COVID-19, at least for the coming years, has has given an additional interest for the Nordics. What protects us is the fact that, which was also mentioned, that even though we market Nordics as a one safe haven, but it is for completely different markets. And then I think that is something that continues to protect us as a local players. It's from a London perspective, a US perspective, it's quite heavy investment to start staffing up for markets like Copenhagen or Helsinki. And we've seen in the past that the main mistakes are done by the international capital who don't know the local market, which is quite natural. But for the question, does it continue? Unfortunately, yes. I would very much like that there would be less competition, but here we are.
There we are. Thank you, Jani. Rikke, if you look from your experience, if we drill down a little bit a level, the interest for the Nordic region, and it was said here, is it a region? Do you see sort of any differences in allocation, in terms of relative allocation between, say, the countries or regions or sub-regions? Do you have any feel on that?
Well, first of all, I fully agree with Jani. It is one region, yes, but it's definitely 4 different countries. And we are in different states in the cycle. Right now, we might be getting closer because of the COVID, but we have been in different stages. And it's also different types of assets that are interesting depending on the country. Mm-hmm. For example, something like retail boxes, you shouldn't be buying in some countries, but in a country like Sweden, it's interesting because that's the way that the Swedes shop. Either they're in the city center or they go to the big retail areas outside the city center. That's not really the way the Norwegians shop, for example, or the Danes shop. And these are things, specifics that you need to know about the culture. It's not a right or wrong, it's just how we've done it. Now, the good question is, what is the COVID going to do again, to that? How are we going to react? Mm-hmm. One of the things that struck me in this COVID crisis when it started was how easily the Nordic, if we stay within real estate, but also in general the countries, how easily the Nordic teams converted and sat at home, because we're used to home office. We are very digitalized in the Nordic countries compared to, say, Southern Europe. Yeah. We have a higher level of online shopping. We have internet all over the place. All of these things, our infrastructure from a digital perspective is stronger in the Nordics than it was in Southern Europe. They had to be very quick and change because everybody had to work from home. But that will then do something to the assets that you invest in, either in the Nordics or in the Southern Europe. But staying in the Nordics, it's a huge question. Where would you invest and how would you invest? Because it also depends on which investor are you. Are you coming with euro-denominated money? Mm-hmm. Then, unfortunately, there are some countries who have their own currency from that perspective if they want this money. And some of these investors have a tendency of hedging. Hedging is expensive, and if you want to compete and you want to include hedging in your costs, you lose out. I think, Jani, that's fair to say. Yes. On the other hand, there are also investors who are coming from the US or the Asia with another currency denomination. They're used to hedging anyway. Some of them even hedges the euro. So they will be more interested in the countries where you have to hedge, if you choose to go that way. So that from alone starts, the investigation into which countries would you invest in. Because if you want to hedge your currency, or if you have to, there are some countries where you can forget it. It's very difficult to compete with Swedish money in Sweden, for example, if you need to hedge. Then you definitely have to have another investment strategy than the Swedish krona denominated investor has. That said, it's been very interesting that pre the crisis, or if you go back a few crises, pre the financial crisis that we had, that Most investors invested in Sweden. There was only one location for them, and that was more or less Sweden. I think half, Max can confirm this, but half of the investments done in Sweden were by foreign capital. After the crises, it went down, I think, to 10, 15%, maybe maximum 20%. The rest was Swedish capital. But interestingly, you saw that then the investments in Finland and Denmark started to go up by international investors. So I think we have a case here that everything is a go. It depends very much on the global investor. Where do they want to go? What's their criteria? But also how sophisticated they are and how much time they have to spend on getting to know smaller countries like Denmark and Finland. But what I do see is global investors always, when they started in Europe, they started with, the UK, and they started with Germany, and then they started to branch out. And I think that is what we're going to see now. They're going to branch out even more. Now, is there a country that will close down for real estate? No. We all know, we've been in this game so long, that good investments are always possible. You just need to find it. Yes. I think what you will see is that international investors will be joining up with local teams more than they did previously to find that piece of gold. And we all know it's there. That's what we're hunting. But that piece of gold somewhere. And that depends on the strategies, and it depends on what the different, investors and advisors believe is the future.
Rikke, thank you. That's great. I before I move to Max, to get the pan-Nordic advisors' view on this, I have to go back a little bit to Jani. If you look at the asset classes, different types of assets, what do you see do you see any asset class that really will suffer? We mentioned offices.
There's of course, and then as Rikke mentioned, this depends by country, of course. What we have experienced in the past months is that the safe haven really has been the living segment, residential, that has actually stayed very, very buoyant. One could say that, well, is there actually a risk that if that market has actually continued with the yield compression where everything else has suffered, then is there a risk, or will that stay there? I think that's a question of short to long-term difference. But if you look today, the winners have been definitely living segment. Care segment in Sweden has been very buoyant. And then the massive hit has been taken in retail and hotels and partly in office segments. Now, the question for an investor with the 5 to 10 year horizon is, of course, that what's going to happen in the long term. So these actually stay open for hotels and retails as they are the outcast at the moment. As a definition, you would expect that if the market has overpriced already the crisis, then maybe there's an opportunity. Maybe that's the gold nugget that Rikke was saying, that's what you can hunt for.
That's great, Jani.
I would conclude saying that my main concern is similar to Michael. It's the office. That's the biggest unknown. With hotels and retails, I think there's been massive hit. Offices is somewhere hovering there. Nobody really knows what's going to happen there. So that's the interesting discussion point. And it's a massive asset class. So that's where my eyes are at the moment.
I understand. Thank you very much, Jani. And Max, from your view, what's your reflections?
Well, I agree what has been said, and for the reasons that Michael summarized, the Nordics is going to stay a very attractive region for international capital. I'm speaking to German, Asian, and American capital right now, and I think the interest is very high. As Jani said, there's a lot of capital hoovering. I think the one interesting point could be, we have seen an increase between the Nordic countries itself, the internal trading between Finns going to Sweden, Swedes going to Denmark, and Norwegians going to Sweden. There has been an increase of that kind of investment. And if you look at how the 3 Nordic countries except Sweden handled the pandemic, it has been different, and Sweden is kind of the outcast there. And I think that if you look at tourism, I think Sweden will be hit harder than the other countries, and that's a question if that also goes for investors. But having said that, I think that it's in relative terms. I think that the Nordics has just strengthened the position for international capital. And if you look at the segments, I think that it's obvious that residential and public properties has performed very well going into this crisis and will continue to do so. And the question is around office and retail mainly. But I think that when it comes to office, I think that once again, the COVID-19 has served as an accelerator for a trend that we already saw. We are using less space. We're willing to pay more for good space, and we're questioning to pay for space that is not needed. And I think that these trends are just has just been accelerated, which means that good office will stay good and will continue to perform good returns. In good locations, of course, but where there will be offices that will probably be redundant, and you have to do something else with them.
Thank you, Max. I think this is a great time and place to segue into our last theme, actually. And here I would like to turn myself to you, Jens, and not only as a banker, but maybe also with your previous experience from other places. And in not similar, but in volatile times. We are rather bullish on this panel around that more money will be allocated towards the sector and specifically also the Nordics, which is, I guess, in one way, very good news. But are there any blockers to this? Do you see any black swans in this situation or bad weather on the horizon?
Well, I think that's the key point, is that you do not see black swans until they show up.
Absolutely.
So, of course, things could happen. Let me just say first, in sort of before I joined the bank, I worked at an insurance company. And I think sort of the overall theme here is the same as I recognize in my old position. There is a lot of capital, and that capital wants to go into the real estate sector. One thing to keep in mind is that when you look at an insurance company, it's a very much asset liability game. And that means that if you, as I worked in the company that was the largest insurance company in Sweden, and our liability side is in Swedish currency. And that means that what we do is that we're going to go into the Swedish currency and where we want to increase the amount where we put it in real estate. And so far, I haven't met a single CEO of an insurance company who's told me that they are overweighted in sort of real estate. So that's the first point. The second point, I very much agree with what everybody else has said, and that is that this will speed up sort of already ongoing processes. If you look on the sort of the retail sector, it's a sector we've been a bit careful about Swedbank for quite a long time. The big unknown is the office space. We do not know. I mean, we also feel we can do this, but in the end, we miss real people. We miss coffee machines. We want to be a part of the community. And this is just sort of a bad... This is not a real thing, to be honest. So I think people want to go back to offices. And how that office space will look, well, I'm not an architect. You know that much more than I do. A few things more. The first thing is interest rates. If you look at interest rates, today I think the IMF will come up with an update on their view of their on the world economy. First, they talked about low interest rates. Then they talked about low for long. Now they talk about lower for longer. So I think we will see quite a long time with low interest rates. And imagine an environment where you remember my three phases: mitigation, startup, and budget consolidation. And it could be mitigation, startup, mitigation, startup, mitigation, startup, and then budget consolidation. But in such an environment, interest rates will continue to be long. The final thing, and it's more fun if we disagree. So I want to disagree with one thing that has been said before. I do not think that the differences between Sweden and the other countries are really so big that everybody wants them to be. If you look on Google data, if you look on movability and things like that, it's pretty similar what you see between Sweden, Norway and Denmark. I think this sort of difference in approach is a bit exaggerated, and I think that this will affect the economy not as much as we think. When it comes to tourism, you have to remember that most Swedes, what we do with tourism is that we take and export our money, we travel outside. If that money now will be spent in Sweden, I'm not that certain that that will be negative for the Swedish economy.
Thank you, Jens. Any comments on Jens' statement that it at one level isn't that different? Jani?
Well, I think there's a truth in the sense that if you look from a global perspective, then Nordic countries are very homogeneous if you look at how people behave, what we do. And that is the Nordic market that we are selling. There's a lot of governmental and behavioral similarities. Even the language is mostly the same, except Finland. I think what we are saying here is that there's within the real estate market, there are differences. And then just to give few examples, Sweden, very regulated residential market, Finland, the most liberal in the world. Of course, that has a huge impact. Lykke mentioned about the retail behavior. There's a care segment is completely different. How you use rental apartments in Copenhagen, 80% rent, in Oslo less than 10. I think there's a major difference which impact the real estate segment. But if you look from macro perspective, then I have to agree that yes, we are very homogeneous, even though we as Finns always want to be different to the big brother Swedes.
Max, to that question, you know, you Newsec runs advisory businesses in all Nordic countries.
Yeah, and I've learned that we have to be a little bit careful here. A Swede should not comment on a Swede, and vice versa. But you know, I think that everything is relative. I think if you look from a Japanese or an American's perspective, things are very alike, and I think that it's fair to treat this as one region. But on the other hand, I agree when it comes into details and when it comes into real estate investments, which is a lot about details. If you want to find the golden nuggets that Rikke is looking for, you have to know the differences and you have to understand the differences in the countries and work with them rather than against them. And as Jani pointed out, there are some differences in legislation and in traditions and in how the market actually works. But you know, that's what Newsec is for. You need a good advisor so you can get help if you're coming from Korea or somewhere else.
That's great, Max.
Sorry about that.
That's great, Max. Michael, I mean, investing means different sources of capital, of course, and how do you view the access to equity, to various other instruments, to bank lending? Is, you know, has anything changed there? Where is the appetite?
Yeah, I was a little bit nervous going after Jens on this question because in terms of the alternatives and interest rates, he has a much more expert view than I do. But I agree with what he has said, and you know, based on the experience, you know, within that we've had personally, and also just from speaking to other investors, I think there is, you know, one, as Jens rightly pointed out, I mean, there's, you know, the lack of alternatives for institutional investors is a serious concern for them. The level of yield on interest rate in their fixed income portfolios is much lower than they expected. And I mean, you just look, there's trillions of dollars of corporate, you know, or government debt around the world that's at negative interest rates. And so even at very low level, you know, cap rates from historical perspective in real estate, the yields look relatively attractive. And also my impression is that the Nordics actually probably are the most, you know, of the European institutions, probably the most heavily weighted towards real estate, particularly some of them in Sweden in particular. But if you look at other parts of Europe, you know, there's a pretty clear underweight for many of the institutions towards real estate. And I think the COVID crisis, despite what we've been talking about, I think will kind of continue that shift towards real estate even more. At the moment, so equity, I think, is continues to be readily available. I think at the moment that there are clearly fewer transactions going ahead. Some people can't get investment committee approvals, but I think that's more an interim point in time situation rather than something that will persist in the medium term. I think at the moment the other issue is where it is less strong is certainly on the debt financing side. We are levered buyers for the most part. And so we do raise financing, and it's certainly improved. I mean, you see how much corporate debt has been issued over the last month or two. It's really incredible. But at least so far within the real estate markets, and certainly within the bank mortgage market, debt is less available than it was going into this crisis. It's more expensive. LTVs have come down. Now, the trend is certainly positive. Every week by week we see. The implied yields coming down, I think more appetite from the lenders. And the good thing is, I think now, that many banks have told me, and I'd love to get Jan's perspective on this, is that, versus the last financial crisis where there was a significant liquidity crisis within the banking system, no one is making that case to me today, at least so far. And so the feeling is that, it's maybe a moment in time here and waiting for some normalization. But the debt financing market should come back. But at the moment, they are, from at least our experience, clearly more dislocated on the real estate side than the equity markets.
Thank you, Michael. Jens, you wanted to comment on that?
Well, I just want to add that it feels strange to say this in a sort of time like all the problems with COVID-19. But one good thing about COVID-19 is that this is the first economic crisis I've been going through the last 30 years where the bank has not been the culprit. And that's, we are sort of not the part of the problem, but we're rather a part of the solution. And that's quite a big difference. And I want to emphasize what Michael said. If you look on sort of the liquidity we have available, it's enormous. We have no problem whatsoever with liquidity. What we need to be careful, though, is capital, because we do not know how long time this crisis will last, because in the end we are not the epidemiologists. We do not know how long time it will take. And we also know that both if the economy continues to slide downwards, then we need more capital. But also if the economy would go upwards, we also need capital in order to provide to lend out money. But I think the key point there for us as a bank is that when we look upon this, we tend to think that when we evaluate our customers, we look on two things. One is relationship. In times like this, having a long-term relationship with both a bank and a customer is important because we know each other. And in the end, we know that friends you do not make during good times. Friends you make during bad times. It depends on when you're there when things are tough. And the other thing we will look upon is risk, of course. And there are some sectors we are a bit more careful about because there are some sectors where you had really low returns on, and in a post-COVID-19 environment, it might change. So we are a bit hesitant when it comes to sort of the retail sector, and we are a bit hesitant on other areas as well.
Thank you. I just need to go to Jani when we have just a few seconds left on this segment. But I started this conversation on this theme by asking Jens if there were any breaks or bad weather on the rise, and I guess. Is this sort of maybe the definition of a break on opportunities in segments where there actually are good business to be done, but not financeable?
Yes, and we are facing that. So it's always good to hear that it's improving. But if you look where this really has hit and where the banking system is not part of the solution, is definitely on these distressed assets like retail, which of course opens up. If somebody needs to sell, then the pricing goes up a lot, or the yield does go up, because many of the banks are saying that we are completely shut. So it's not just Jens, but many banks saying that we are not touching because we don't need to. There's a lot of people asking for financing. So if everybody shuts down on retail, it gets very tough. We just started one of the retail projects and can definitely say that was not easy to finance. So you need to package a lot of stuff to get any financing for retail. And the other is, which I am a bit worried, is construction and development. It is one of the major factors that typically help the economy to get back on track. So that's where the government pushes money to get construction ongoing. That helps the local economy. And the banks have been hesitant on that. So clearly the appetite for development projects, LTVs, pricing, or even appetite to do it has decreased. And that is a source of problem, especially for weaker construction companies. If the banks shut down, it basically kills the company. And we've seen that happen, and I'm seeing some signs of that happening once again. I truly hope that Michael is right and it improves, because I would not want us to go into a negative cycle because we kill some businesses just because they are not in flavor of the day. So yes, I think that's a break, and I think that's also a risk.
Thank you, Jani. Conscious of time, we are a little bit over time. So let's move into the finishing round, and this is more of a quick exercise where we will pose a couple of questions to the panel, and if you agree, you raise your hand, and we'll see if someone opposes. That means that the hand is not risen, and then you will get the opportunity to comment, and this will flow pretty fast. So let us put the first question out there. It's a broad one, so you can qualify it. Will we get used to higher vacancies? Michael is no, so you're the outlier. We have to go to you.
Yeah, well, I was a bit late because I was making my mind up, so I will take that as a no.
That's a no, yes.
I think we will in different sectors. I think as we've talked about and was mentioned before, I think within the living sector, I think there will not be higher vacancies. You know, there are still people around, and I think and they need places to live. And I think construction probably will slow down. In most of the Nordics, they were undersupplied from a housing side to begin with. So I think the pressure in that sector will continue. I think care and some of these other sectors, I think, you know, the logistics sector where we've been big investors, I think we'll likely see lower vacancies. I do expect that office vacancy will increase to some extent. I think has been mentioned a couple times already. You know, the Nordics are on the kind of cutting edge as it relates to technological adoption, working from home already. So I think versus other parts of Europe, it may be less so than, less in the Nordics than other parts of Europe. But I think there probably will be, over time, as government programs run out, some sort of increase in the office market. But I think, as Max said earlier, you know, the good office will always be good, and I share that sentiment. I think it'll be more, you know, fundamentally more physically challenged buildings. You know, something that's been pushed out of people's minds to some extent in the short term has been ESG, but a couple months ago that was all everyone was talking about. And I think buildings that are less efficient from that standpoint will struggle even more than they did before, which I think again is just an acceleration of other trends. But I think that it will have a negative impact on the office market, and I think retail, that's clear. And I think hotel probably, you know, will recover, thinking about it from an operational perspective, but it'll probably take a couple of years for vacancy or occupancies to get back to where they were in 2019.
Thank you, Michael. So let us move to the next question. Will the traditional long lease market for offices stay the same? Rikke, you have a go?
Yeah. Sure.
No,
I don't think it will. I don't think we will see the same way. I think we will see a much more need for flexibility from the different occupiers. And I also think there's a lot of talk about office. There's a lot of talk about how it will change. I agree with what was said earlier. People need to be with other people. That's how we create good ideas. That's how when we spar with each other, that the new ideas are coming. I think what's going to happen is the following. Everybody is going to be, or a lot of companies are right now saying you can work 2 days from home, for example, 3 days in the office. I think it's between 2 or 3 days that most companies are saying at the moment. And you will have to be in the office once in a while. We want to come into the office once in a while. And then you need somewhere to sit. You might not need your own space, but you need somewhere to sit. And if you are in the office and those you're working with are not, then you need somewhere, because most of it is open space, you need somewhere to go in and have a conversation. So you need to have extra rooms for that. So I think the office layouts are going to change, point one. But I also think that what we're going to see is that office areas or offices in the outskirts of cities are going to be more and more attractive, because when people can sit and work from home, they will, a few days a week, they will have the ability to live further away from the city. So there's some transportation. So a lot of things I think we will see is that the market, it's not going to be the city centers or the CBD areas anymore that is going to be the hot ones. It's also going to expand to other parts of a city or a region because of logistics, because of the ability for people to live elsewhere at the moment. Before, we were talking a lot about an urbanization trend. A lot of people are now talking about, well, is that going to continue, or are we going to see it in a different way now going forward? I think the urbanization will still stay to a certain degree, but it will include more cities than it did before. And I think that's what's going to impact the office market as well. Because quite honestly, when I've seen most office layouts, when they've been made into more sort of co-working spaces or type of spaces, you still need a lot of room for that to create the areas where people need to sit. So I think you will see it going down in the CBD, but you will see it going up somewhere else.
Thank you.
But that flexibility is important.
I understand. And that probably will not be offered by the current way of long leases, I guess. No. Thank you very much. Anyone want to comment on that specific one? Yes, Jani?
This is a point where I actually disagree. I thought that was interesting view how you said it, and it could be, I don't know, but my bet is that it actually this will not change the urbanization trend. So I do agree what you said about the change of users office, but where I disagree is that I still believe that the urbanization will continue, and this need to be in the center is actually enforced. So my bet and our bet in where we invest is that it's the central locations that will be the winners, and it's actually the losers are in the outskirts. So this will be, this is good for the market, because then you have a different view. So
yes,
that's very good.
It will happen, but here I disagree.
Yeah, that's something to place a bet on. That's excellent. Let's move on to the next question, and guess we have already covered this in a way, but so it's probably a no-brainer. But nevertheless, will we see interest rates of any significance in the next 5 years, or make it 10? No. Jens, just to qualify it, 20 seconds.
No. The only thing, I mean, if you look on the world economy, it will be a few tough years ahead. I think that's one thing to keep in mind. When you talk with people from the World Bank and the IMF and the OECD, they're talking about the deepest financial recession since the 1930s. And sometimes they're talking before the 1930s. Okay. So it's a really tough environment. The only sort of you could counter argument you could find against that, if there is so much money flooding the gates, so after a while it will create inflation. But so far I do not see that. The thing that worries me then would be all the sort of borrowing by the governments, because if you look on the sort of the debt to GDP, the deficit to GDP, it's increasing in a sort of large amount. And if in the end, if the sort of authorities cannot tax that, they will need to get that through inflation. But well, who knows?
Who knows, exactly. Okay, next question. Have COVID-19 speeded up things or slowed down things? Depending on the perspective of time, I guess. So, has it speeded up? Rikke?
I just needed to know whether we were saying yes to speed up or slow down.
I know, I saw that. So you can pick and choose.
Okay, yes, it speeded things up.
Yeah.
Definitely.
Max?
Yeah, I agree. I think it speeded things up in a lot of different ways. But I think it's also important to remember that we are by no means at the end of the pandemic. I think that we are just in the beginning, and we don't know for how long this will go on, and that can change things and also, you know, put a brake on certain trends. But as of now, I think it just has speeded things up for a lot of different things.
Thank you. So we are reaching the end of this webinar. Thank you, everybody. But we have a last very important question, which is, will you call Newsec in the next 10 weeks for support, second opinion, or a project? I think that's a very important question, and obviously Newsec is looking for a hands up here. That's great. Just the fact that you're on this panel, I think, tells a good story. So, thank you all for listening in. It's amazing that so many people have signed up, and thank you very, very much to the panelists. I think it has been very well time spent on this very important question about the future, and for sure we are traveling in uncharted waters. So we'll see what happens, but thank you so much for contributing. And to all, stay tuned. In September, there will be a next webinar, and Newsec will get back to all of us on the timing of that and also the theme. So we're really excited to look forward to that as well in September. So thank you, everybody, for investing time in this webinar. Thank you so much.
Thank you.
Thank you.
Bye.